Welcome to my discussion on plant assets. My very last one, a premise on self-constructed assets. I want to take just a minute and summarize what we did. In the end, we capitalized an amount for our factory that was material, labor, and overhead plus interest for 2014, and material, labor, and overhead for 2015 plus interest for half of 2015. So the total cost of the factory that we built for ourselves was $1,750,769. This interest was put in this account because it's believed we could have taken that money and paid off loans. And whether you agree with that or not, they're saying that's an interest we incurred because we chose to use our money to build a factory instead of to pay off debt. The first thing we had to do, the step one, was to calculate what we call weighted average expenditures, so we could figure out on average how much we had tied up in this. Then we did a step two. We calculated our interest expense to make sure we knew what our ceiling was. I think your author did that in step three. I've always done it as step two. Then in step three, we calculated the amount of interest we could capitalize. In our example, we did what's called the specific identification method. And the reason it's called the specific identification method is because we had a construction loan. And so first we used the construction loan percentage rate, and then we took a weighted average what was left. If we did not have that, we would have taken the weighted average approach, which is just a little bit easier. You figure out the weighted average cost of all your debt, and you don't have to worry. You just use the weighted average amount. There's one more thing that you need to be cautious of that we haven't talked about yet. One last cautionary statement. You cannot leave the assets on the books for more than its fair market value. So if you could have, in the end, had this done cheaper by someone else, you're going to have to write it down to that amount and recognize a loss when you put this into use. But if you were able to save some money on it, then you're done. We would start to depreciate this asset using $1,750,769 as our depreciable basis. So, that was pretty complicated and yet pretty fun. Hope you enjoyed the discussion. Talk to you soon.